Good morning. We will pay attention to cash discount and trade discount when goods are sold. We will also determine the sales price and the cost of sales price. When we look at this block, we see that if trade discount is allowed, we must subtract the trade discount from the sales price. If trade discount and cash discount is allowed, the cash discount must be subtracted from the figure that was determined after the trade discount was allowed. And you don't record any entry for trade or cash discount. So that is very important. You deduct the cash discount and the trade discount from the sales price, and no entry is recorded for the trade or cash discount because the reduced amount is the amount that you will receive as an income in the business. If we look at trade discount, when a retailer sells goods to another retailer, this retailer can ask for trade discount because the goods were sold in bulk or because the goods are purchased with the purpose of reselling. Trade discount is deducted from the sales price. Before the entry is recorded, because the trade discount reduces the sales price and it will reduce the amount received as cash or the amount that is owed by trade debtors. No entry is recorded for the trade discount. So trade discount is deducted from the sales price to determine the actual sales price that will be received as an income and the amount that will be deposited in the bank or the amount that the debtors owe you. No entry is recorded for trade discount. Cash discount can be allowed when goods are sold to motivate the customers to pay for the goods immediately to improve the cash flow of the business. If the goods are paid on the sales date, the date when it is sold, it is recorded as a cash transaction. The cash discount will be deducted immediately. If the business sells to another business and they allow trade discount to the other business, you will first subtract the trade discount, and on the reduced amount, the cash discount will be deducted. The cost of sales must be calculated on the normal sales price. That is very important. So although you deduct the trade discount and the cash discount from the sales price to determine the actual sales price, the cost of sales must still be calculated on the normal sales price because the actual cost price was used to determine the normal sales price. Cash discount is deducted from the sales price before the entry is recorded, and no entry will be recorded for the cash discount or the trade discount. Cost of sales. To determine the cost of sales, the normal sales price will be used even if a cash discount or a trade discount was allowed. So you must first determine the normal sales price and use this normal sales price before any discount was allowed to determine the cost of sales. Example 1. Trade discount and cash discount on cash transactions. If we read this entry, Mamelodi traders sold goods to ABC stores for 8,000 Rand. So the goods were sold for 8,000 Rand. 10% trade discount is allowed, so that means you first have to deduct the 10% trade discount, and then an additional 5% discount is allowed. Okay, that means that when we calculate the actual sales price, You will write down the sales price of 8,000 Rand. Then, because there was a trade discount of 10%, you will deduct 10% on the 8,000, and that will give you 800 Rand. Subtract the 800 from the 8,000. That means that the credit sales price is 7,200. Then there's an additional 5% cash discount. So on the 7,200, you will calculate 5%, and that will give me 360 Rand. If I deduct the 360 from the 7,200, the cash sales price is 6,840. So we determined now that although the normal sales price is 8,000 Rand, that we will not receive an income of 8,000, we will receive an income of 6,840. We will record an entry for the 6,840 because that is the sales price that we will receive. So if I look at my ledger accounts, you will see that I will record 6,840 on the debit side of the bank because that is the money that will be deposited into the bank. The income for the business will be 6,840. We have to do the calculation for cost of sales. Although we sold the goods at a cheaper price, the cost price that we paid for the goods were not reduced. So we will calculate the cost price on the normal sales price. So very important, calculate the cost of sales figure on the normal sales price. Okay, cost of sales is 100%. The profit is 25% on cost. So I must add the 25 to the 100, and that means my normal sales price is 125. The normal sales price were given as 8,000 Rand. If I want to determine the cost price, I have to use this 8,000 multiplied with the one that we want to calculate. So I will multiply it with 100 and divide it by the one that's known, and the one that was given to us was the normal sales price, so I will divide it by 125. And that calculation will determine what is the cost of sales figure. So the cost price of the goods when we purchased it was 6,400, and we sold those goods for 6,840. I also have to do a recording now for the 6,400. Cost of sales is an expense for the business. Expenses increase on the debit side, so I will debit my cost of sales account. Inventories is an asset. I sold goods, so I reduced the amount of goods, so my inventories will decrease on the credit side. We will now look at the effect of this transaction on the accounting equation. So if we look at the accounting equation, the account that was debited was the bank account. So I will show that bank is debited. The account that was credited was sales. So I indicate that the account credited is sales. Bank is an asset. So my assets increase, and sales is an income that will increase my profits, so the equity will increase with 6,840. Cost of sales will be debited because expenses increase on the debit side, expenses reduce profit, so equity will decrease with 6,400. Inventories were credited, so I will show that the inventories decreased, so my assets decreased with 6,400. When we sell goods for cash, we will use a cash register roll, and this entry will be recorded in the cash receipts journal. Okay, so when you do an entry, determine whether there are trade discount or cash discount on this entry and deduct that before you calculate what is the sales price at which the goods were sold. Remember that the cost of sales must be determined on the normal sales price. If we go to example 2, here there's also trade discount and cash discount. The following entries appeared in the financial records of Mamelodi traders. Sold goods for cash. Okay, so we know that this is a cash transaction. The normal sales price is 400 Rand. And we allow 10% trade discount on the 400 Rand. And additional 5% cash discount if the goods is paid immediately. Okay, then the entity maintains a profit of 20% on sales price. Very important to determine whether the profit is made on sales price or whether the profit is made on cost price. Okay, first of all, we have to calculate what is my sales price. The normal sales price is 400 Rand. We allow 10% trade discount, so I must work out what is 10% of 400 and deduct 40 Rand. That will give me the credit sales price as 360. Then there's an additional cash discount of 5%. So on the 360, we will deduct 5%. That will give me 18 Rand. So the price at which these goods were sold was 342 Rand. So we will have to record an entry for the 342. Because the goods were sold for cash, the money is deposited in the bank and the bank is debited with 342 because assets increase on the debit side. So in the accounting equation, we will also show that the bank was debited and that assets increased with 342. The account that's credited is the sales account because income increases on the credit side. So the account credited is sales, income increases profit, so the owner's equity will increase with 342 Rand. Okay, if we want to determine the cost price, I must use the normal sales price to determine the cost of sales. So I will take the 400 Rand and the sales price is given to me. The profit that's made in this calculation is 20% on sales price. If the profit is made on sales price, then sales price equals 100%. A profit of 20% on the sales price was made, so that means the cost price must be less than the sales price, so the cost price will equal 80%. If we want to calculate the cost price, we use the amount given, the 400, and I multiply it with the one that we want to know, that is the 80, divide by the percentage that's known, the 100, and that will give us 320 Rand. I will record this 320 Rand and show that cost of sales account is debited because expenses increase on the debit side. So in the accounting equation, I will debit cost of sales, show that the profit decreases with 320, so the profit and equity will decrease with 320. I will credit the inventories account because the asset decreased on the credit side. And if I decrease inventories on the credit side, I have to show that my assets decrease with 320. If we sell goods for cash, a cash register roll is used, or you can also say a cash invoice is used, and the entries are recorded in the cash receipts journal.